Thank you to everybody for joining for this session. I know that this is a very important topic, to the financial well-being of many people, and yet it's also an incredibly confusing topic. And so I hope to kind of walk you through the process and just kind of lay out what the steps are for getting forgiveness through PSLF. And I just want to thank UCLA and the staff assembly for partnering to put on this workshop, because like I said, it's a very important topic. So just to kind of give you a little bit about myself and the partnership, how I kind of came across the opportunity to speak with you all. I'm Kristen, and I earned my PhD in financial planning at the University of Georgia. And throughout my studies there, I really took a deep dive into the student loan realm. And, I was noticing that a lot of my classmates and colleagues who were studying financial planning, investment management, a lot of these, quote unquote, complex topics were shying away from student loans and saying things like, oh, well, student loans are too confusing, or, the policies are constantly changing. We can't keep up with that. And that kind of struck a chord with me, because if even those who are working in the financial services industry are unwilling to dive into the intricacies of student loans, how much more difficult must it be for the everyday borrowers who are trying to figure out what steps they need to take in order to get their loans forgiven or paid off. And so that kind of started this really passion point for me. And so now, even though I am working with, a financial planning firm where I'm doing kind of your traditional financial comprehensive planning, retirement planning, this focus on student loans remains a passion point for me. And so after this presentation, if you do have any questions, clarifications about your eligibility, about the program requirements, do feel free to reach out to me. I have my email address listed here on the slide. And then if you need kind of more personalized assistance, if you have a complex situation, that's something where I do recommend actually reaching out to a personal consultant who can help you with student loans. There's several services out there. That's something I can help you with. But really, I hope that you'll be able to take away from this free education just everything that you will need in order to be successful. So these first few slides, it's going to be kind of just a broad overview of the program, specifically as it relates to being an employee of the UC system, and specifically UCLA. And so I'm just going to kind of quickly run through these first few slides to give you that overview, and then we'll dive in a little bit more specifically. So PSLF, Public Service Loan Forgiveness, is a program, a federal program created for individuals who work in public service positions. And what's unique about it is that it's not even so much the position you work in, but it's actually the employer you work for. So if you work for a qualifying nonprofit or government employer, then you are eligible for public service, qualifying as a public servant. And so those who work in public service jobs and have federal student loans and work for the equivalent of 10 years or make 120 qualifying monthly payments, they get complete forgiveness of their student loans tax-free. The University of California, and the tax ID number is listed there, which you'll need at several points in the process. The University of California is a qualifying employer. So what that means, if you receive your paycheck from the University of California, it doesn't matter if you're a professor, if you're a front desk worker, if you're, in lawn services, if whatever your role might be, you are eligible because of the entity that you work at. And so if you have any specific questions about specifically pertaining to the UC and UCLA, there's a link there for you, the website that you can visit. And in order to qualify for PSLF, there's a PSLF application that needs to be filled out. We'll talk about details later. And there's a deadline for the waiver, which I'm going to discuss, which is October 31st. As well, there's a help tool online that can kind of help you through the process. We'll discuss it more later. And whenever you get that form filled out, there's a specific place for you to upload it for certification by UC through the UC path. And so what you'll do is you'll actually fill out the tool through the help, fill out the form through the help tool. You'll print it off, sign it with an ink signature, and then submit it through this UC path in order for the employer to basically verify your employment. Okay, and then if you need any specific help with the loan servicer side of things, you can contact Mohela. Here's the phone number for them. And if you have a different loan servicer, you can contact them for additional information as well. Okay, so with kind of that broad overview done there, I just want to step back for a second and just look at student loans as a whole, because I think student loans can really be a stress point for many people. It's kind of like, you know, a lot of people describe it as just like this burden that you feel like you need to carry for many, many, many years, even after your schooling is completed. And I completely resonate with that thought. And also, I just want to provide an opportunity to possibly reframe that a little bit in case it can be helpful for you to kind of relieve some of your stress you may have about student loans. So when we think about this idea about, you know, are student loans worth it? One of the kind of mathematical takes that I like to look at is just thinking about, okay, first, what would your income be without the degree that you earned? So just as an example, if you work full-time on minimum wage in California, your annual take home or your annual gross pay would be about $30,000. Okay, so let's say you go to school, whether that's for a bachelor's degree, master's degree, whatever it may be. And after earning that degree, you're able to secure a job that earns you $50,000 a year. So, you know, you can put out your own numbers based on what you have experienced personally and kind of make estimates, but then you're going to go ahead and take that difference. What is the income increase that you see as a result of having your education? In this example, $20,000 a year. Then if you think about the number of working years that you will be working, I put 30 in here, but that's actually pretty conservative. You know, that's most people, you know, work until age 60, age 65. So depending when you enter the workforce, your working years could actually be closer to 40 years, but I just put 30 to be conservative. And if you take that working years difference, you multiply it out, you'll see that by getting your education, you could have a lifetime income differential of $600,000. And for many people, this number will actually be much, much, much greater over their lifetime as the result of having formal education. And so when you look at that $600,000, you know, if it required you to take out 10,000, 20,000, even 80,000, 100,000, or if you're in, you know, medical school, much beyond that, even if you had to take out this amount of debt in order to get that education, from a lifetime value perspective, it's totally worth it, you know? So I hope that that can, I hope that you can just, you know, kind of reflect on that and see that, you know, student loans really are, in the vast majority of situations, very, very worthwhile. And so I hope that can relieve a little bit of stress, even if it takes you 10 years to get through this program, even if it takes you that long to pay off your loans or longer. Student loans in many cases are worth it. All right, so let's dig into a little bit of the specifics about the Public Service Loan Forgiveness PSLF program. There's 4 major qualifying aspects to the program. Number 1, you must have federal direct loans. It doesn't matter if they're subsidized or unsubsidized. As long as there are direct federal loans, you qualify. You must work for a qualifying employer. That means full-time for a government or nonprofit employer. There's also a provision where you can have multiple qualifying part-time positions, which I'll cover a little bit later. And then number 3, you need to be on a qualifying repayment plan, which is an income-driven repayment plan. And there's several different types of income-driven repayment plans. There's something called the pay, repay, ICR, IBR, and the new IBR plan. If you're on any one of those plans, then you're in a qualifying repayment plan. Then you need to make 120 on-time full payments. After you've done that, while fulfilling all those different requirements, you receive total forgiveness of your loans. The problem is this program opened in 2007. And when the first kind of 10-year wave came across in 2017, and we thought we were going to see so many people, so many borrowers getting their loans forgiven, the studies show that about 98% of people applying into the program to get forgiveness were denied or rejected for small errors that they made that made them ineligible for the program. So there's been lots and lots of difficulties. For example, if you have federal family education loans or FFEL loans, or if you have Perkins loans, even though these loans are backed by the federal government, they're not considered direct federal loans. And so you may have thought you were making payments towards forgiveness because you had a federal family education loan or a Perkins loan. Come to find out, it's not an eligible loan for the program. So all the progress you've been making doesn't even count. Second, a lot of people were in ineligible repayment plans. When they graduated from undergrad, they called their loan servicer. They said, put me on the lowest payment plan possible. And they were, put into these long extended repayment plans or the graduated repayment plan, none of which are eligible for qualifying payments for PSLF. Not only that, but when people were experiencing financial hardship, maybe they lost a job or, had extenuating circumstances, and they called their loan servicer to figure out what could be done about their student loan payments. Instead of being told, hey, did you know if you go on an income-driven repayment plan and you have zero income, your monthly payment will be calculated to be $0 a month? Instead, they were misdirected into forbearance, which is basically a pause on your payments, and that doesn't count towards PSLF. So there were many, many problems and miscommunications happening in the system. Fortunately, the PSLF waiver was announced last October 2021, a 1-year waiver, which is the government's and Department of Education's effort to remedy a lot of these problems that have been seen in the program. So very, very, very important. Under that PSLF waiver, you can receive retroactive credit for payments that have been made on any type of federal loan. If you've been making payments on FFEL loans or Perkins loans that did not previously qualify for PSLF, you now have an opportunity to get those payments counted. Any repayment plan now counts. Not necessarily moving forward, but looking backwards. If you were making payments on the wrong plan, you are going to get credit for those payments under the waiver. Additionally, if you had periods of time when you were failing to make payments, or you were making payments, but for one reason or another, they weren't considered full payments. They were, I've heard of situations where, people's payments were like a few cents off from being considered a full on-time payment, and that month didn't count towards PSLF. So the waiver is making a lot of provisions for kind of these past errors and mistakes that were made in order to get credit to those people who are in qualifying employers and have been paying on their student loans. And just might I add, continue putting your questions in the question box and I will address them at the end, but I'm just, for flow's sake, I'm going to keep moving forward, but please do feel free to continue submitting questions. Now, quite possibly, in my opinion, one of the biggest aspects of the PSLF waiver is that under the waiver, you will receive credit for the highest payment count across all of your student loans. So let me kind of break down what this means. Let's look at the scenario here. Let's say that you took out some loans for undergrad, and those loans have been in repayment since 2015. And you have a $1,500 balance on one of them and a $3,000 balance on the other, and you've been making qualifying payments for 92 months of your 120 months. So you're getting real close to forgiveness. Well, then, let's say in 2020, 2021, you decided to return to grad school. And so you took out some more loans. So you have another $15,000 loan that originated in 2021. And you've been making payments on that loan too, still qualifying for PSLF, but you only have 20 months worth of credit. Well, under the PSLF waiver, when you consolidate all those loans together into one loan, that new consolidation loan will be the total of all your loan balances, and you will receive credit for the highest payment count. So you will get 92 months worth of payment credits on all of that balance, including the graduate loan that you just took out in 2021. Okay, so this is huge for people who have gone for multiple degrees and have been working full-time for eligible employers throughout that period. Also very important to note, because it's unclear whether this provision is going to extend beyond the waiver or not, but prior to the waiver, if you consolidated your loans, your payment count would actually be wiped out to 0. Okay, so if you took that 92 months, the 92 months, the 20 months, you packaged them all into one consolidation loan, your new balance of qualifying payments would be a big fat goose egg. All right, so pay very, very close attention to this. This is the way it's working under the waiver, which expires October 31st. But after that, there has not yet been clarification for sure whether that specific rule will stay intact or whether it will return to the old rule of resetting your payment count. So very, very, very important to know. So let's walk through the actual process of going through PSLF. The first step is to determine your eligibility. Number 1, do you have federal loans? Here's a website where you can go to log into your student aid dashboard. You can use your FSA ID to log in, and there's a little button that says view details. Click on that. You view your loan breakdown, or you can download a text file that has all of your loan information. And you look, if you have federal loans listed there, you have federal loans. Note that just because they're listed there doesn't mean they are direct. You will also see FFEL loans there or Perkins loans there. And so pay attention to whether they actually say direct loan or if they say FFEL loan or whatnot, because that's going to be important for determining whether you need to consolidate or not. Okay, number 2, do you work for a qualifying employer? So you want to look at your HR department to confirm. If you receive a W-2 from UC with that tax ID that I have listed at the front of the presentation, you work for a qualifying employer. Okay, so that's the way you do it. You look at your W-2, you see what the employer tax ID number is. There's a tool here on the student aid website where you can type in an employer ID, and it will tell you whether that employer qualifies or not. So, if for some reason, you're new to UCLA, you worked for a different employer full-time in the past, you're not sure if that prior employer, qualified you or not, that's the way that you would, check it out. You'll want to look up your old W-2 information or just Google to see if you can find that employer's EIN number and use the online tool to see if they're a qualifying employer. All right, so to qualify under the PSLF waiver, you're going to have to submit your employment, or actually you have to generate the PSLF employment verification form using the PSLF help tool before midnight on October 31st, 2022. Okay, and I'm going to go into that in just a second when we talk about submitting that form. But that's how you determine eligibility. Okay, so consolidation. This is a step that will be relevant for many people, but not all people. In many cases, consolidating will be important. So the only people who do not need to consolidate their loans before moving forward with PSLF are people who have all direct loans, so no FFEL, no Perkins loans, and they all have the same payment count. So you entered into repayment at the same time for all of those loans. So like with undergrad, for example, you may have taken out loans, your freshman year, sophomore year, junior year, senior year, but then you graduated and you had a 6-month grace period. And then after that 6 months, you started repayment on all of those loans at the same time. Okay, so those would all have the same repayment count. However, for grad school, the way it works generally is that as soon as the loan gets dispersed, you technically enter repayment unless you request an in-school deferment. So if you have graduate loans and you took out loans your first year, your second year, your third year, fourth year, and especially if you're working full-time and making payments on those loans, then those do not have the same payment count because the loans you took out in your first year, you've been paying on longer than the ones you took out in your third year. Okay, so pay attention to how long you've been in repayment on each of your loans. If it's the same, you don't need to consolidate. If you have FFEL loans or Perkins loans that are not direct, you need to consolidate them into a direct consolidation loan, which, by the way, anytime you consolidate your federal loans, they become a direct federal consolidation loan. If you have a mixture of direct and FFEL loans, you're going to want to consolidate all of those together. Okay, so don't just leave your direct loans and then take your FFEL loans and consolidate those. Just put it all together in one consolidation loan. And then if you have direct loans, like I was mentioning, but they have different payment counts, you're going to consolidate. Now, technically, kind of what will happen in this process, you'll only fill out one consolidation paperwork process, and it's all considered one consolidation. But then functionally, when you see it on the back end, all of your loans that are considered subsidized will go into a direct consolidated subsidized loan, and all of your loans that are unsubsidized will go into a direct consolidated unsubsidized loan. So you'll technically have two different consolidation loans, but they'll be treated as one in the sense that you will get the updated highest payment count across both consolidation loans. So how do you actually consolidate? There is an online consolidation form. If you go to this link, and when you go to that link, which actually I'm gonna open it here and just show it briefly to you all, because this can be sometimes a very intimidating part of the process. Okay, so this is what the direct consolidation loan application looks like. You get here and you have an opportunity to log in using your FSA ID. I'm just going to do it through the demo. Okay, so because if you've logged into your FSA ID, when you get to this page here in this box, you are going to see your actual loans that you have. Okay, so you're going to want to check all of those boxes for the loans. And then you're going to see here what the new loan amount is going to be on that consolidation loan and the interest rate. This interest rate is basically a weighted average of the interest rates that you had up here based on their corresponding balances. Okay, so the only thing that kind of changes when you consolidate, and this can be a kind of complicated concept for people to understand sometimes, but let's say that you entered repayment on your student loans when they were $20,000. Let's say that was your original loan balance, and you entered into a income-driven repayment plan where your monthly payment was not enough to cover the interest charge that your loan had each month. So even though you've been making monthly payments, let's say your interest has actually been accumulating and your loan has been growing. Whenever you resubmit income verifications for your new income-driven repayment plan monthly payment calculation, they're always going to base it on your original $20,000 loan value rather than that amount that it's grown to with the interest. However, when you consolidate, any interest that's grown, it actually gets what's called capitalized, so it gets added to your principal. Okay, so that new consolidation loan balance will be your new original principal balance, which now includes all the interest that you've accumulated on the back end. And so that can sometimes increase your monthly payment different than what you've been used to. Okay, so I just want to give that fair warning that by consolidating, it can sometimes increase your monthly payment, but you just got to kind of weigh the pros and cons. If you're going to gain many months of PSLF credit by consolidating, it's probably worth it even if your monthly payment increases by consolidating. So that's just something that you personally need to weigh. That's kind of a situation that would maybe warrant looking into getting a personal consultant to help you with this process so you can really understand how that's going to change your payments. But I do just want to point that out. Now here we have a box about the grace period. And this is going to be relevant for those of you who maybe just graduated from undergrad and you started working. And so you're not technically making payments yet on your student loans because you're still in that 6-month grace period, but you're already working for a qualifying employer. And so you want to get going on your 120 payments. If that's the case, you can select to not delay the processing of your consolidation application to the end of your grace period. Have them go ahead and process it now. You'll enter repayment immediately upon the consolidation, and then you'll go ahead and start making payments from there. Down here, you're going to do your servicer selection. So you can go ahead and select this radio button here for PSLF. And then for the federal loan servicers, you're going to select this MOHELA here. Okay, so that's the loan servicer that's handling all PSLF borrowers. And so that's the servicer you're going to want to select. Oops. Okay, so here you're going to do your repayment plan request. And there's going to be this box here where you can kind of enter some of your income and filing status and all that. This is just an estimate to give you an idea of what your payment will be on the various repayment plans. Later in the consolidation process, it's going to have you actually link into your IRS data. So they are going to populate it with accurate information about what your employment income has been in the last year. So don't worry about this being super accurate right here. It's just to help you ballpark what your payment might be so that you can select the correct plan. Okay, so here you'll see they have all the different repayment types listed. And down here, you're going to have an opportunity to select which plan you want. Remember, in order to be eligible for PSLF, especially after this waiver ends moving forward, you must be in an income-driven repayment plan. Okay, so do not select standard, graduated, extended, or extended graduated. Okay, none of these are income-driven repayment plans. The only ones that are income-driven repayment plans are pay-as-you-earn, income-based, income contingent, or revised pay-as-you-earn, or for some borrowers, they'll also see the new IBR. Okay, and then I'm not going to walk through the rest of this because this is all just going to be personal to your situation. It's all about your employment information, your family size, you're going to link to your IRS, all that kind of thing, okay? And then you're going to get to the end, sign and submit it, and that will send off your application for the consolidation. If you are married and you file your taxes jointly with your spouse, it's going to say something about, we need your spouse to co-sign on this consolidation. Don't be alarmed by that. It does not mean that your spouse is obligated on your loans. It doesn't mean it's, tied to their identity in any way. It's just basically because their income factors into your taxes and impacts your payment on your repayment plan that they need your spouse to kind of sign off on that kind of process, verifying that their income is being reported and all that kind of stuff. Okay, so don't be alarmed if that happens. right, so jumping back here. All right, so that's everything at this link here. Now, once you've submitted that consolidation application, if Mohela contacts you regarding this 10-day cancellation period, it's kind of just an opportunity to say, are you sure you want to do this? You can actually elect to waive that 10-day processing delay. And given the short timeline we have now between when, now and when this waiver expires, I would recommend that you waive that period. So stay on the lookout for an opportunity to waive the 10-day processing delay. Now, this next point is a little bit nuanced, but I do want to point it out. In some circumstances, it's very important to wait until all of your loans are consolidated and transferred to Mohela before you actually submit your PSLF employment verification. And specifically where this is important is if you have some loans that you realize now, oh, wow, I have already made 120 qualifying payments on that old, loan from undergrad that I didn't realize I was eligible. And I'm qualified for immediate forgiveness on that loan. But I also have these more recent grad loans that I haven't finished paying on. What's going to happen if you submit your employment verification early before you consolidate? It's going to get applied to that old loan, and that old loan is going to disappear. And now all of a sudden, you're going to be stuck with your small payment count on your more recent loans. Okay. Whereas if you consolidate first, then all of your loans are going to have credit for being in repayment for 120 months. And then you submit your employer verification, and then you're going to get it applied to all your loans. Okay. So there's some nuance there that in some circumstances, you really want to make sure that that consolidation is completed before you submit your PSLF forms. Now, if there's, FFEL loans and Perkins loans, and you're just concerned about, oh, if I submit my verification and they haven't been converted to direct loans yet, is that going to work or not? That kind of comes out in the wash. It's okay if you submit those processes simultaneously to get those into the consolidated direct loans while you're also working on the employment verification process. And given the tight timeline, it's probably okay. But in general, I would really recommend that if you need to consolidate, take care of that first. And just as a reminder that getting your employment verified by the deadline, all you have to do, technically speaking, is generate the employment verification form using the help tool by the deadline. Okay, so you're going to log in with your FSID. You're going to use the help tool to fill out all your employer information. You're going to generate the form, print it out, and then you still have to sign it. You still have to submit it to your employer for them to sign it. And then you still have to upload it, which I'm going to talk about this process again in just a second. So you can kind of draw out some of those later pieces if you really need to, as long as you generate the employment verification form by the deadline. Now, having said that, don't just wait for waiting's sake, right? Because that employment verification process takes time, and UCLA especially is really encouraging and asking, get those forms in soon if you can, as soon as possible, because they have processing delays on their end. They're trying to verify all the different employees that are trying to get this done. So recognize that there are processing delays in this process. And so just be mindful of that. So specifically, how to do this PSLF employment verification. There's a link here for the PSLF help tool. You're going to click on that link. I would show you, but they don't have a demo feature. And so I actually am unable to progress through the steps for you today. What you're going to do, you're going to fill out, your personal information. You're going to fill out, how long you've worked for the employer, your start date, how many hours a week, if you're considered full-time, stuff like that. You're going to generate it, print it, sign it in ink, must be in ink. And then you are going to upload that to your UC path. Then the employer is going to take care of getting it verified on their end. They're going to return it to you with the signed copy. You're going to take that copy and you're going to upload it to Mohela. If Mohela is not your loan servicer currently, because you're in the process of a consolidation, you will soon be with Mohela, because once you consolidate, it'll be transferred over to Mohela. Or if you're with like Fed Loan Servicing, because you've already made progress towards PSLF in the past, you can contact them and ask them, do you want me to submit this to you, or are my loans going to be transferred to Mohela, and should I submit it to them? Okay, those are always questions that you can ask your loan servicer. Okay, and you know, so I'm just going to address this real quick because I'm seeing a question and I'm talking about deadlines, and this is kind of a high stress time, I know, because we're only a month away from the deadline. So I do know that UC is asking for forms to be submitted by the 30th of September. That is 100% an internal deadline. Okay. And my understanding is it's not even a hard deadline. If you submit something after, they will still process it. They're just saying allow a full month if you want to be able to turn this into Mohela before October 31st. Give UC some time, give UCLA some time to process your paperwork. But again, like I said, in terms of technicalities and the waiver itself, as long as you generate the form under your FSA ID using the PSLF help tool by the deadline, October 31st, it will be in the system that you initiated the process before the deadline. Okay, so technically speaking, that is your ultimate deadline, but do allow time. Okay, now let me talk through a timeline here. Consolidation, you submit the application. This is a slow process. There's lots of waiting. Consolidation itself can take 30 to 60 days. If you're already with Mohela, it might go faster, but be patient, it takes time. Once you've submitted your employment verification, to UCLA, they're saying, do it by the 30th so that you can allow time, because it could take them a month to get it back to you. All right. So that way you can, submit it by October 31st. Once you have all your employment certification submitted to Mohela, it's all being processed, you're looking at potentially a 90 to 120 days period waiting until all your payment counts get updated and fully reflect your eligibility. This, I understand, is very, very stressful. It's very difficult to be in limbo and not have updates. And I want to kind of, forewarn you of a couple of things that can be emotionally triggering in the process. So first of all, if you are with a different loan servicer and you submit your consolidation, at some point, you may get an email, or in your portal, you may be notified that, congratulations, your loans have been paid. You have a zero balance. Okay, that's not forgiveness. What that means is that the new consolidation loan was created. It paid off all those older, smaller loans, and now you're obligated to the new consolidation loan. Okay, so it might be true that your old loans now have a zero balance because they were paid off, but they were paid off with the consolidation loan that you applied for. Okay, so being told that your loans were paid off through consolidation doesn't mean they were forgiven. Okay, so I just want to spare you the momentary hurrah that's kind of like a false start. And then secondly, when you get transferred to Mohela and the tool starts updating, you may momentarily see that your qualifying payments for PSLF update to a very, very low number that is much lower than you have qualified for. So you may see, you have 0 eligible payments. You may see that like, oh, only 20 of my payments are counting as eligible, and I know I've made 40 payments. There is kind of like this delay where any of the payments that are going to be qualifying strictly due to the waiver, whether they were payments on the wrong repayment plan, payments on the wrong type of loan, if they were, missed payments or whatever, all of those kind of like special waiver related eligible payments take some time to be updated in the process. There's kind of like some back end digging that has to be done through the Department of Education records in order for them to update that. So just be patient, wait. If you have any questions, you can always contact your loan servicer. And then after, anywhere from day 1 to 3 to 6 months, you should see everything come through. In the meantime, you just continue making your monthly payments, or in the case right now, because we still have the COVID forbearance period, you're not required to make payments until January. So, you don't make any payments, but then starting January 1st, if you think, you're eligible for forgiveness, but it hasn't been updated yet in the system, just keep making those monthly payments. And at the end, if it's determined that you made overpayments, you'll be reimbursed those payments. Okay, so just do what you need to do to stay in good standing, make those monthly payments. Because you're on an income-driven repayment plan, you are required to recertify your income every 12 months or sooner. Okay, so every time 12 months have passed, you need to contact your loan servicer, give them your updated tax information or your updated pay stubs. They'll recalculate what your monthly payment is on your income-driven repayment plan, and then that will be your new payment for the next 12 months. You can be a little strategic with this process. So, if you get a new promotion and your income increases, but you still have 7 months till you have to recertify your income, you can actually wait the full 7 months before you recertify your income. So you can take advantage of those 7 months of the lower monthly payment because of the data that, they're using for calculating your payment. And then once, you've maxed out the full 12 months since you last recertified, then you're going to have to update them with your new income information. And conversely, if for some reason you decide, to switch positions, you take a pay cut, you don't have to wait the full 12 months to report your income. You can report your income as soon as you experience that drop in income situation, then your monthly payments will be recalculated based on that new smaller amount. All right. And then on top of that, we're talking a lot about this October 31st deadline. And I really want to make sure I clarify and emphasize the October 31st deadline. It's not a deadline for PSLF program in general. It's just a deadline for the waiver. Okay, so moving forward, you're still going to do this employer PSLF certification process. You're going to still use the tool. You're going to still upload it to your UC portal. They're still going to process it and get it back to you. And then you're still going to upload it to your servicer. None of that ends on October 31st. This is an ongoing thing. As long as you're working for a qualified employer, you're making your payments, you're working full time, you're constantly working towards that 120. And every year it's recommended that you resubmit that PSLF employment certification form just to make sure your payment counts are getting updated in the system, even if you haven't changed employers, but especially if you have changed employers. All right. All right, so the last step in the process, the trophies and the letters. So on your federal student aid website, there will come a day when you get this beautiful little picture of a trophy that basically says, hey, you've made 120 qualifying payments. Oh, but by the way, keep making payments until we tell you it's officially official. So when you get that trophy, keep making your payments. And then when you get an official letter, this is what the letter looked like when Fed Loan Servicing was a servicer. I imagine it will look very similar with Mohela, just with a different logo right here. This is kind of the official thing you are waiting for that says your balance is officially zero. You can stop making payments. Any overpayments you've made will refund to you, and you are officially federal student loan debt free. All right, so I know this is a ton of information. And so it's very, very complicated, which going back to the beginning of the presentation, like I said, this stuff intimidates financial planners, okay? So don't feel bad if you're like, oh my gosh, I have no idea what you just talked about for 45 minutes. This session is recorded. Go back and watch it again. Any clarifying questions, remember, you can email me. And then I want to touch on that consultant piece. There are several different entities out there. I'm not going to specifically endorse any one of them, but there are some large organizations out there that solely focus on student loan consulting. You can look them up. You know, if that's something that you want me to help you with, that's something that we can make arrangements for me to help you with. But I understand that this is really complicated, and there's also lots of free resources. There's Facebook groups that kind of help, you know, work with this. There's a lot of Q&A tools on the federal aid site. So, you know, there's lots of information out there if you need it. All right, so I'm going to kind of scroll back here through the questions, and I know some of them may have been answered in the process. So just bear with me here as I kind of look at which ones still need to be addressed.
Also, all of our questions that have been posted, I've been keeping track.
Okay, let me touch on the part-time thing real quick. So, you know, this is speaking from the technicalities of the PSLF program. I won't speak specifically into the policies of UCLA or any of the other UC entities, because I know that there may be, you know, certain policies that prevent multiple part-time positions. But just from the PSLF program perspective, if you work part-time for a qualifying employer, you are ineligible for PSLF on that employment alone. But if you work for multiple qualifying employers part-time, then you have to have an average of 30 hours per week between all of your qualifying employment, and then you will be eligible. Okay, and remember, that's an average. So let's say you work 20 hours a week for UCLA or for whoever, and you know, based on what you've been told by HR and your supervisors or whatnot, your specific contract, let's say you're allowed to have another part-time position, you need another 10 hours a week on average. Okay, so if you could find another qualifying employer that allows you to take, you know, a 10-hour shift on a Saturday, you know, or maybe if you're like a nurse or something, or a doctor that, you know, can take 24-hour shifts in the hospital, like if you can do that a couple times a month, you know, or if you can find something online or a remote position that's for a qualifying employer that gets your cumulative average hours per week up to 30 hours a week, then that counts in terms of PSLF purposes. And you'll just submit separate PSLF verification forms for each of those employers. Okay, so you'll submit your, you know, 20 hours a week with UCLA, they'll sign off on it, you'll submit it to Mohela, and then you'll generate another another form that says, okay, I worked 10 hours for this other qualifying employer, submit it off to them, they sign it, they give it back to you, you submit it to Mohela, and then Mohela sees that, okay, cumulative across these employers during this time period, they worked an average of 30 hours a week, they qualify.